All right, let's get right into it. The stock market took a real gut punch today. And the reason? It's a headline that, frankly, we haven't had to worry about in a while. A massive, geopolitically driven oil shock. It sent energy markets into a total frenzy and had investors running for the hills. And you can see the damage right here on the screen. It was just a sea of red. The S&P 500 down over 0.5%. The Dow Jones took a painful hit, plunging 1.6%. And even though the Nasdaq managed to keep its losses a bit smaller, it was still red across the board. Look, this wasn't some minor tremor. This was a broad market sell-off. So what lit the fuse? This right here, a brutal, nearly 6% spike in U.S. crude oil. All of a sudden, Wall Street is terrified that a sustained rise in energy costs is going to reignite inflation, put a major squeeze on consumers, and, maybe worst of all, force the Federal Reserve to just completely scrap its plans for interest rate cuts this year. But that's just the big picture, the macro story. The real story of the day, the one that's just so fascinating, is the great divergence we saw. Because in the middle of all that fear and chaos, two very specific AI-driven stocks, they didn't just hold their ground. They absolutely soared. First up, let's talk about our first victor, Broadcom. This absolute tech heavyweight proved today that it basically has an immune system that's completely resistant to any kind of market panic. And check this out. This is just sheer strength. On a day when the market is getting absolutely hammered by oil fears, Broadcom just rips higher by almost 5%. This is what traders call incredible relative strength, and boy does it tell a powerful story. So why did it happen? Well, Broadcom just straight up ignored the macroeconomic panic. They came out with incredibly ambitious forward guidance, basically confirming that while other companies are bracing for a slowdown, the demand for their essential AI networking gear, the plumbing for data centers, is actually accelerating. So here's the key takeaway. They've become a defensive AI play. Now for our second winner, the trade desk. And this move was even more explosive, driven by a single game-changing piece of news that sent total shockwaves through the advertising world. And this just brilliantly illustrates the power of a narrative shift. Look at that number, a staggering 18.4% surge. This wasn't some slow drift up. This was a high-volume breakout, and it was driven by aggressive institutional money piling in on the back of a major headline. So what was the news? Reports came out that the trade desk is in ad sales talks with OpenAI, and the market, it immediately got it. TTD is trying to position itself to become the foundational advertising layer for all of generative AI. This could let them bypass the traditional search monopolies entirely. This isn't just a deal, it's a strategy to build a brand new moat for the next decade of technology. Okay, so we've seen this incredible strength in AI. But, a market sell-off always has its victims. There are always losers. So while AI thrived, who paid the price for the oil shock? All right, let's look at the flip side of the coin with American Airlines. They were the textbook case of collateral damage from today's geopolitical crisis. Just a clear example of a business getting its margins absolutely crushed by forces outside its control. And the damage was severe, a steep 5.4% plunge. There was absolutely no hesitation here. Investors saw that oil headline and they just dumped the stock right from the opening bell, sending it crashing. And the connection here is painfully direct. Airlines are always the immediate victims of conflict in the Middle East. Jet fuel is usually their number one or number two biggest expense, and with crude spiking like this, the market is pricing in a massive hit to their profit margins. A sustained shock like this could literally wipe out their profits for an entire quarter. So that's the story of the day: the oil shock, the amazing AI defiance, and the airline collapse. Now let's arm you with the key takeaways. This is your water cooler edge. Here's exactly what you need to say about the market tomorrow morning. All right, on Broadcom, here's your line. Their enterprise AI networking demand is locked in and accelerating, making them immune to the noise. Seriously, that incredible strength, jumping almost 5% while the market tanks, just proves how essential their tech really is. For the trade desk, it is all about the future. Here's what you say. If TDD becomes OpenAI's programmatic partner, it secures an incredible moat for the next decade. This isn't just about a partnership. It's a potential game changer for the entire ad tech world. And finally, on American Airlines, its drop signals a much broader risk. So the key insight is this: if crude stays elevated, it's not just airlines that get crushed. Inflation bleeds into every name.
This is the warning shot for any company that's sensitive to fuel and transport costs.
So that really leaves us with the big question for tomorrow and for the weeks ahead. Are you worried that an energy-driven inflation shock is returning, or is this a temporary geopolitical blip? Comment below. Subscribe to Market Fluency for your daily edge.